Welcome to the Daily Insights that matter. The RBI announced its fourth bi-monthly monetary policy today with several key announcements. The six-member Monetary Policy Committee announced its repo rate decisions amid global headwinds and macroeconomic challenges. The MPC has unanimously decided to keep the rates unchanged. The current repo rate, which is the rate at which banks borrow from the RBI, has remained steady at 6.5% for four consecutive policy announcements since it was increased from 6.25% to 6.5% in February 2023. Furthermore, its stance is not changed either. It is focused on a withdrawal of accommodation. This simply means that they're aiming to control the money supply in the economy, which in turn helps manage any potential upward pressure on inflation. Explaining the MPC's rationale behind this policy stance, Shaktikanta Das mentioned that the overall inflation outlook is clouded by uncertainties arising from factors such as a fall in kharif sowing for certain key crops like pulses and oilseeds, lower reservoir levels, and volatile global food and energy prices. The consumer price index based inflation, also known as retail inflation, eased to 6.83 in August from a 15th month high of 7.44% in July. Interestingly, at this meeting, it was reiterated that the inflation target is 4% and not the band between 2 to 6% earlier. Considering the evolving inflation growth dynamics and the cumulative policy repo rate hike of 250 basis points, which is still working through the economy, the MPC has decided to keep the policy repo rate unchanged at 6.5%. Even though the decision to keep the rates unchanged wasn't much of a surprise, what was really noteworthy was the tone of the MPC's guidance. Additionally, the RBI has also retained the GDP growth forecast at 6.5% and inflation at 5.4% for fiscal year 24. Moreover, the RBI might consider open market operations of government securities to manage liquidity consistent with the stance of the monetary policy. The fourth pause in rate hikes is actually a relief for the market. Investors and businesses always keep a close eye on these policy decisions as a hike in rates increases borrowing costs, which can have a big impact across parts of the economy. So, this fourth pause is definitely a breath of fresh air. With that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com